Good evening. Welcome to Business Day right here on ET Now. I'm Avan Dabash. A quick look as to how the markets panned out this Monday before we take you through the top headlines. But it's the start of the earnings season and we got off to a fairly tepid start and there was quite a bit of profit taking by the end of the session. 6,000 was breached on the downside and cap goods really led the weakness. You had the total turnover which came in close to 1.1 lakh crore rupees and the market breadth pretty much evened out by the day's close. 5988, that's where the Nifty shut despite a Goldman Sachs overweight stance with the Nifty target at 7,000 and the Sensex at 19,691. Broader markets which held up didn't manage to hold on to those gains by the end of the session. They too tempered off. Well, lots of big corporate stories. We can keep you up to speed with them after the headlines. Goldman Sachs remains bullish on India, says that the Nifty will touch 7,000 by the end of the year, boosted by favorable economic environment. Sees Tata Motors, Sterlite and Hindalco as attractive bets, even as it says that Infosys will see a rebound this year. The government moves to cap diesel subsidy in a bid to rein in a runaway fiscal deficit. Sources tell ET Now that the idea is to shift towards a per-litre subsidy formula which will insulate the government from volatile crude prices. Finance Minister P. Chidambaram meets bank chiefs for pre-budget consultations. Tax stops on bad loans and tax-free bonds are top on the agenda. The bankers also want a hike in the threshold for tax on fixed deposit income from 10 rupees to 25 rupees a year. The Import Group of Ministers proposes a steep cut in the CDMA spectrum prices. Telecom Minister Kapil Sibal says that the Cabinet will soon finalize the prices. Arcom and Tata Tele rally in trade as the CDMA spectrum, as sources tell ET Now that the spectrum prices may be cut in half. FMCG major Marico will spin off Kaya Care Solutions and will list it separately as Marico Kaya Enterprises. Marico's Chairman and Managing Director Harsh Mariwala says Marico's investment portfolios will be transferred to Kaya existing and long surplus resources. Okay, it was a fairly listless session on Dalal Street, nothing to really shout home about, and we didn't even manage to hold on to 6,000 by the end of the day. While oil and gas held out, it was cap goods that dragged the index down. The broader markets, which were showing you so much resilience throughout the session, petered off and by the day's close were higher by just about 0.2% and 0.5% respectively. In terms of sectoral movers, it was metals as well as pharmaceuticals which managed to hold up. And on the downside, as pointed out, it was capital goods as well as select real estate stocks which took a beating. Some of the big index losers included in L&T, Jaiprakash Associates also from high beta, HDFC as well as HDFC Bank were rather tempered in the session. Some stocks which were in focus today, Maruti Suzuki was in top gear as CLSA raised its rating to a buy from sell, raising the target price to 1915, saying that the earnings outlook is finally improving and the EBITDA margins may widen to nearly 10% by FY15. Apart from that, all of the metal stocks were in the limelight on the upside, shining away in trade, like Tata Steel, SAIL, JSW Steel, Bhushan Steel and JSPL, as the government has imposed a 20% import duty on Chinese hot-rolled flat steel, imposing a tax on China to curb the disruption of the domestic industry. Apart from that, Indraprastha Gas was in focus as it raised the CNG prices in the NCR region by 4% on an overall increase in the input cost of natural gas. Apart from that, you had an Adani Enterprises and Adani Power which were in focus as the Power Ministry recommended restoration of 30% coal linkage for the Mundra Power project, and that will substantially reduce the cost of production for the company. Ken India also in focus as CLSA maintained a buy rating with a target price of 425. They believe that Ken India is the top pick in the oil and gas space and the stock may gain 26% from these levels. Suzlon in focus as it won 2 new orders of 16 megawatts in the UK. Hind Motors also rallied very smartly in the session as the board will be meeting on the 10th of this month for restructuring. Some of the other index gainers, we spoke of Maruti, Cipla, Ken India were some of the other counters which rallied very smartly in the session. On that note, let's find out what the market men are betting on and what are their investment strategies for 2013.
We have become very positive on the PSU banks since early December. And this is primarily to do with two things. One is, of course, if interest rates start getting cut, then some of these PSU banks will start booking profits on their available for sale securities portfolio. I think with an economic recovery, some of the bad loans may become good, and that is a good positive tailwind. We have been underweight consumer, pharma, IT.
High valuations are a cause for concern and give pause to what you actually put your money in India. That's why we think picking stock is very important, and you do need to be very selective. Domestic consumption of products and services are the most attractive parts of the Indian market to us.
Okay, what about the F&O activity and how did that pan out? Let's get in Navneet Saluja, who now joins in from our research team. Navneet.
Hi Awan, it was a day of profit booking. You had the Nifty futures finally closing today's trading session at 60.16 with about 28 points premium to the spot Nifty. Not much of activity seen today as the futures added only 2 lakh shares in open interest. Also, if you look at the volumes, they were very thin. We did about 76,000 crore of turnover on NSE by the end of the day. And looking at the options data, well, more of call writing was seen in today's trading session, clearly visible in the Nifty PCR, which slipped to 1.02, and call writing was seen at level 6100, which added 6.5 lakh shares. You also had 6200 and 6300 strikes, which added open interest to the tune of about 4 lakh shares. And on the put side, you saw shedding at 5700 strike, and major addition was seen at 5900 put strike, which added 4.6 lakh shares. On the stock futures front, clearly it was the oil and gas space which was in focus. Oil marketing companies like BPCL and HPCL witnessed fresh long positions. On the futures side, you also had ONGC and Cain India, which gained in today's trading session. Well, from the auto space, Maruti gained after CLSA upgrade. Huge amount of long positions were being built up there. Also, Mahindra & Mahindra was up in today's trading session. From the Nifty, on the losers, you had L&T and JP Associates, followed by Hindustan Unilever, HDFC and HDFC Bank, where short positions were being built up. And metal counters like SAIL, JSW did well in today's trading session. Fresh longs were seen there. Jain Irrigation was up by about 3%. Long position seen there on the futures side. And Biocon too did well. There is some kind of announcement which is expected from the company tomorrow. So on back of that, Biocon was up in today's trading session. In terms of open interest gainers, you had Bhushan Steel, Syndicate Bank and L&T.
Thanks very much, Navneet, for giving us that perspective. Meantime, you had Goldman Sachs today, which came out with an overweight rating on Indian equities, expecting the Nifty to touch a level of 7,000 by the end of 2013. Goldman sees a favorable micro as well as macroeconomic factors driving growth in India, and the bank is bullish on Tata Motors, Sterlite Industries as well as Hindalco, and it also expects Infosys as a stock to rebound in 2013. But it was oil and gas stocks today which clearly ruled the roost. So you had some of the state-run oil companies, the likes of a BPCL as well as an HPCL and IOC, that rallied on expectations that the government will hike diesel prices. IOC, in fact, that one ended the day a bit flat. But we spoke earlier in the day with RK Singh, who is the chairman and managing director of BPCL, who says that a hike of 1 rupee per litre every month will ease the borrowing costs for oil marketing companies.
Increase of 1 rupee per month will wipe out the entire under recovery in a matter of a year or so. And that will certainly increase the cash position of the oil companies, because right now we are being compensated by the government, and money comes late, and in the interim period we have to borrow heavily from the banks at a very high interest rate. And all this problem will be resolved to a large extent, because cash position of the oil companies will improve, thereby the borrowing will come down, and we will be able to mobilize working capital through our own sources.
And even as the mounting under-recoveries and the government's inability to bear the additional subsidy burden has forced the argument for a hike in diesel prices, sources tell ET Now that the government is keen to adopt the per-litre diesel subsidy formula. Now, how exactly will this work and what are the advantages? Let's get in our policy editor, Supriya Srinath, who now joins in from New Delhi with more details. Supriya.
This is one such argument that's finding favor with the financial managers of this government and also maybe politically pragmatic for the government to do. So what essentially the government is recommending at this stage, and the thinking within the government is that why don't they fix the price of subsidy for every litre of diesel being sold instead of giving an ad hoc amount every 3 months. That leads to a lot of haggling between the finance ministry and the oil ministry on one hand. This is not to say there will not be a price hike in diesel. Indeed, there will be a price hike. But if you look at the under recoveries, they are to the tune of 9 rupees per litre. Can the government hike prices like that? The simple answer to that question, everybody in New Delhi says, is no, even for a period of 10 months. They say it may be a pragmatic thing that the oil ministry thinks it can do, but a 1 rupee hike for the next 10 months essentially means a 10 rupee hike, and the government is in no mood to A, burden the consumer with that kind of a hike, and B, there are pragmatic electoral realities that one has to live with. There are elections by early 2014. Can the government afford something like this? Perhaps not, and which is why fixing the subsidy on every litre of diesel being sold by the fuel retailers like IOC, HPCL and BPCL finds favor with the government. It finds favor with the financial managers of the government, because what does it do? It brings it in a whole lot of predictability and planned expenditure to diesel subsidy burden. So the government will know exactly how much to apportion for as far as diesel is concerned. Remember, that is really the big culprit. It accounts for almost 60% of the total under recoveries. Under recoveries to the tune of 1,80,000 crore, staring the government on its face this fiscal itself.
Many thanks, Supriya, for bringing us those details. As Supriya pointed out, you have the under recovery on diesel, which currently stands at 9 rupees per litre. Now the government may be looking at fixing a per litre diesel subsidy. Moving away from that, then, India's top public and private sector bankers met the Finance Minister P. Chidambaram today at North Block with their budget wish list. Mrinalini Krishna was tracking that meeting and now joins in to talk about what some of the suggestions were that were put forth by the bankers. Mrinalini.
Top public and private sector bankers were here at North Block with their budget wish list, and they met the finance minister with the following suggestions. There was a suggestion to increase the term deposit TDS limit from 10,000 rupees to 25,000 rupees. There was also a suggestion made to reduce the lock-in period for tax-saving deposits from 5 years to 3 years to bring the product at par with other tax-saving products. There was also a suggestion made to incentivize current account deposits by allowing a 2% interest to be paid on it. There was also a suggestion that banks be allowed to issue tax-free bonds. Apart from the fact that they already have tax-saving deposits, the banks should be allowed to issue tax-free bonds. There was also a suggestion made to allow for the entire provisioning amounts that banks make for NPAs to be treated as tax deduction for better management of NPAs. Banks said there's a need to curb gold imports in a calibrated manner. Nothing drastic should be done. They've also raised the need for removal of the securities transaction tax, and perhaps also bringing introduction of the commodities transaction tax. As far as meeting the Basel III norms are concerned, banks said that perpetual deposits, perpetual bonds may be treated as a tier 1 capital, and since banks find it unviable to sort of offer a higher coupon rate, and that is not making the product attractive, perhaps there should be some amount of incentivization that is done on that front as well. So clearly a lot of demands as far as bankers are concerned. Let's see what the finance minister really takes up as, in the budget that he presents this year.
Today the threshold for term deposits is TDS is 10,000 rupees. Now our view is that since almost all the fixed deposit investors have got their PAN numbers registered, this amount should be increased to 25,000. Only a certain part of the NPA provisioning is exempted from tax, and in case of NBFCs and home loan company, home finance companies, no exemption is given for bad loan provision. So for the banks we have asked that whatever is the provisioning done as per RBI norms and as certified and approved by the auditors should be allowed as tax deductible.
Thanks very much, Mrinalini, for those details. Straight to the telecom space, and in what could be a huge breather for CDMA companies like Reliance Communications and Tata Tele, the ministerial panel headed by Finance Minister P. Chidambaram has recommended a steep cut of as much as 50% in the reserve price for CDMA spectrum. However, the cabinet will take a final call on the pricing issue. The telecom minister, Kapil Sibal, said that the spectrum auctions will be held in March.
The auction for the 1800 megahertz band in 4 circles in which bids were not received in November 2012 will be put up for auction. Decision number 2 is to conduct auction in the 900 megahertz band in the 3 metros, that is Delhi, Mumbai and Calcutta, where licenses are due for renewal in 2014. That's number 2. Number 3 is to conduct auctions in the 800 megahertz band in all circles, since no bidders participated in that band in November 2012. And the reserve price for the 800, we will take recommendations to the Cabinet, and the Cabinet will decide on the reserve price.
Let's also get in Gauri Dwivedi, who now joins us for more exclusive details on what exactly this means for the telecom players. Gauri.
Massive reduction in pricing has been proposed by the ministerial panel as far as the CDMA price is concerned. Recommendations will be sent to the cabinet for a final call. So 2 recommendations will be sent by the EGOM. One is either a 30% cut in CDMA price or a 50% cut in CDMA price. Massive reductions we're talking about here. Remains to be seen whether or not the CDMA auction will be a success this time around or not. All auctions, that is 1800, 800 and 900, will be conducted in March 2013. So 2 months from now, we'll know whether or not these prices were enough to get a successful CDMA auction or not. Cabinet is expected to take a call on these CDMA pricing pretty shortly, and that is when, of course, we will know what is it that will be the final price for CDMA, whether a 30% cut or a 50% cut. One important point really needs to be pointed out here, that all spectrum bands are typically decided, the prices of that are typically decided in tandem. A massive reduction for CDMA band. Rest assured the GSM guys will be up in arms, and who knows, they might move court as far as 1800 and 900 pricing is concerned.
Thanks for those details then, Gauri. Now, even though the EGOM has proposed the drastic cuts to the price of CDMA spectrum, telecom companies are still not happy. CDMA lobby AUSPI says that cuts should have been as much as 75%, given that the CDMA ecosystem is far smaller than the GSM one. Let's hear out the AUSPI Secretary General Ashok Sood speaking to ET now.
We go by the kind of figures that we had recommended to the government many months ago when it was being debated. And if I compare those figures against the figures that were used in the last auctions, they work out to something like 25% of figures. That means there should have been a 75% cut if we went by those figures. So in fact, the cut should have been more drastic, in our opinion, if this auction in the second round is going to be a success.
So, sir, fair to say that round 2 of these auctions that are going to happen in March will see tepid participation in the CDMA band?
My gut feeling says yes, that at a 30% or even a 50% reduced price, I would not expect a very, very aggressive kind of bidding in the next round of auctions. It will be as bad or maybe marginally better.
But do you think auctions will happen this time around, given that last time auctions didn't even happen as far as 800 is concerned?
Well, that's shades of the same thing. As I said, I don't think it's attractive enough. Now, whether 1 person or 2 person actually go into the auction or not, it's very difficult to say. But I think it's shades of the same thing. Spectrum in this band, the so-called EGSM band, has already been allocated to CDMA operators. Reliance and Tata's in various circles already have allocation of these spectrum. They already have customers in these spectrums. So where is the question of giving it to GSM?
More corporate news coming your way. Now, FMCG major Marico's board today approved the rejig of its service sector business, Kaya Skincare Solutions. The company will list Kaya separately as Marico Kaya Enterprises, and Marico's chairman and managing director, Harsh Mariwala, said that Marico's investment portfolios will need to be transferred to Kaya along with the existing and surplus resources. Let's hear him out.
We are seeing a lot of synergies between the India and the international business of consumer products, because the international business has grown in size and it's become sizable. Separately, the product portfolio, also there is a lot of overlapping. So we see synergies in product portfolios. We also see synergies in certain costs, as well as talent management. Spinning off of Kaya into Marico Kaya Enterprises Limited would enable Kaya to actually concentrate on the services business exclusively, be far more entrepreneurial and drive its growth.
To the auto space then, and Bajaj Auto today launched its very new Discover 100T, which is competitively priced at around 51,000 rupees. ETNA's Kartika Trehan spoke to Rajiv Bajaj, who is aiming at a 40% market share with the launch of this bike. Let's hear out a slice of that conversation.
My own experience in this industry has been that when you try to gain share by pricing low, you actually end up making a confession that your product is not up to mark. And that is why, while there have been scooters, motorcycles, and more recently at least one car that has tried to gain traction based on price, there's no evidence of success so far. On the other hand, whether it's the Honda Activa, the TVS Scooty, Hero Splendor and Passion, or our own Discover and Pulsar, these are all market leaders in their respective segments, and they all sell at a premium. So what this tells me is that Indians value strong brands, they value good technology, good quality, and they would not mind paying a little more, provided they are convinced they are getting a lot of bang for their money.
So what's planned from here on in terms of exports, and has the bike already hit the market, or will it be hitting in the market in a couple of days from now?
No, we've started dispatches to dealers, so it's not in the market technically, but it will be soon. This month we hope to make about 10,000 motorcycles if we can. It is our anticipation based on our data that we have of our market shares in other segments that we can aspire logically to a market share of about 30%.
Meantime, concerned over falling passenger traffic and low occupancy, the Aviation Secretary has called for an all-airline meet next week. Sources tell ETNA that the airlines may be asked to reduce their airfares and not take advantage of Kingfisher Airlines' absence from the Indian skies. Let's get in Sumit Chaturvedi, who now joins in with more details. Sumit, what have you got?
Well, high airfares are not becoming a headache for only passengers, but for government as well, because government now thinks it's going to create problems for aviation sector in the long run, and that's why aviation sector has called a meeting of all airlines by early next week. Well, aviation secretary is going to tell them to bring down airfares because it is going to hurt the aviation sector's growth. Well, if you look at figures, aviation sector grew at a CAGR of 18.1% from 2004 to 2012, but in May 2012 the passenger numbers started coming down, and in November they came down to a level of 7.8%. So that's why it's a big cause of concern. Airlines will also be told not to take advantage of grounding of Kingfisher Airlines, because it has been come to the notice of Aviation Ministry that some airlines are taking advantage of the situation. So in order to tell them to bring down airfares, airlines will meet, Aviation Secretary will meet airlines next week, but final call has to be taken by airlines.
Okay, thanks very much, Sumit, for bringing us those details. With that, it's a wrap right here on Business Day. Thanks so much for watching. Keep it with ET Now.